G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're going to revisit this 4-year cycle theory that I've been looking at over the last year or so, and we're going to see where Bitcoin is in comparison to the previous cycles. We're also going to take a look at some key moving averages that we've seen over the past 10 years of Bitcoin, and it may indicate what happens next, okay? So let's get stuck in. So the first thing I'd like to do is have a look here at the 3 major Bitcoin cycles. So we've got the 2013 peak, the 2017 peak, and the 2021 double top that we've seen so far. Now, it may not end up being a double top. Maybe we go up like that. But at the moment, it is a double top, essentially. Now, I've got each of these 3 cycles starting from the macro market major correction dates. Now, what I've noticed throughout history is that all the macro markets, so if we're looking at all the major stock markets, looking at the Dow Jones, S&P 500, we're looking at Australia with the All Ordinaries, we're looking at China with the Hang Seng Index. Basically, all the world markets do tend to correct at around the same time. And what I'll show you is just a quick example of that, and that is the Dow Jones. So this is about 100 years worth of Dow Jones data here. And you can see it is a log chart, and you can see we start down here around the 1930 Great Depression, work our way up through the 1970s. We've got the boom that we had here in the 1980s, followed by the major crashes that we had in the 2000s, the dot-com bubble around here, the great financial crisis around here. And then we've got this era over here, which has been the greatest bull run in stock market history. And this is where Bitcoin has existed in this time frame over here. But you'll notice though, and what I've got here, this blue shaded area is the 30-month simple moving average, okay? And you can see that the Dow Jones has a very clear 4-year cycle where it bounces off the 30-month moving average. Now, 30 months is also 2.5 years. It's another way of looking at it. And every 4 years, it does this cadence where it bounces. Now, occasionally have little periods here where it might go sideways, but for the most part, these jumps are all about 4 years, roughly 4 years, okay? And therefore, it's no secret, or it's no surprise, rather, that Bitcoin has had a 4-year cycle. Now, the theory that I'm looking at is that the 4-year cycle for Bitcoin is not something that's just specific to Bitcoin, but it's something that is relevant to all the markets. They all tend to have this 4-year cadence. Now, we could look at other charts as well. In some of my other videos, I look at the S&P 500, the NASDAQ, we look at Hang Seng, we look at the All Ords, we look at a lot of them, and they all tend to correlate and bounce every 4 years, okay? So that's something to look at. Now, if I zoom right in here, this is really interesting. So I'll zoom right into this period. So you can see I've got the dates down here. These are the particular month where we saw those correction dates based off the 30-month moving average. So let's just fix this up a little bit. So you can see here, it's very clear. So around September 2011, the Dow Jones and the other macro markets came down and bounced off the 30-month moving average. We have a bit of a rocky start, and then we get into our groove, and then we crash down. Then we did a little bit of a double bottom. We had a bit of a rocky start, then we get into our groove, and then we crash down. We have a little bit of a rocky start, which included a V-shaped recovery with the big crash here we had in March 2020, and then we get into our groove. And now you could debate whether we're coming down or not, but we are due to come down sometime in the year 2022, if we are to follow this same 4-year cadence that we've been seeing over the last 100 years or so. Now, the interesting thing is, if we look at the dates here, when we get into our groove, this is where Bitcoin tends to peak in these sections here. So if I was to mark the Bitcoin peaks, we've got here around November 2014, which is here. So Bitcoin peaked right there, right when the macro markets were nice and healthy, right at the top. And then in 2017, Bitcoin peaked in December 2017, right here. Look at that, right as the macro markets, or we're looking at the Dow Jones only here, but right in the middle here when the macro markets are doing really, really well. Then in 2021, we had a peak here around April, so around here, and then we had another peak sometime around, when was it? Let's have a look. Let's go back to the Bitcoin chart. The second peak was around, November. Okay, so let's go back. I've lost my place. Around November, which is here. Okay, so those are where the peaks have been. Now, once Bitcoin's peaked, it's been then followed by a bit of a bear market, right, which is also correlated right here with what the Dow Jones and the other markets have done. You can see they've all come down. Okay, now this little section here, the March 2020 crash, to me that was a black swan event, and it probably wasn't going to happen. But we can't really, who knows, like whether that would have whether we would have had a bit of a correction if it wasn't for everything that was going on in the world at that time. Who knows? But right now, we potentially could be going down to meet the 30-month moving average again sometime in 2022. All right, so that's where these dates came from, to show you when the start of the cycle occurred, when we peaked, and then when we came down. So there was a 4-year cycle here for the 2013 peak. It was basically 4 years from September to August in 2015. Okay, and then in the 2017 cycle, it was actually less than 4 years. It was more like 3.3 years. So you can see it was actually a shorter cycle. So there are some people that think we are having lengthening cycles. And what I'm suggesting here is that we're not having lengthening cycles, but rather we are aligning with the macro market cadence that tends to have a four-year cadence. And it's been doing that since about the 1940s on a very consistent basis. So it might be 3.5 years. It could be the full 4 years. It could be 4.5. It could be 3.5. It could be 3. But somewhere in that 3 to 4 year range, that's how long the cycles tend to last, according to this theory. So you can see right now where we are compared to the previous cycles. We're catching up, and you can see, this part was pretty much just bearish and quite low down compared to the peaks. And you can see the same thing here in the 2017-2018 cycle. It's fairly bearish, not much happening. And if we are to follow the same pattern, you would imagine the same sort of thing would happen. Not much will happen until the macro markets are correct, and that's the end of that cadence. Okay, so according to this theory, it's less likely that we turn around and just start doing that. But of course, there's no guarantees. Okay, another thing I'd like to draw your attention to are these two moving averages. Now, we're looking here at the Bitcoin chart on a weekly time scale, and I've got here the 50-week moving average in kind of pink or red, and then I've got the 200-week moving average in an aqua blue. Now, what you'll notice here is that we bounce off the 50-week moving average right there. We go up. Now, this was like a dead cat bounce, and then we cut through it again. And you'll notice when we cut through the 50-week moving average, we continue on all the way down to the 200-week, and that's where we tend to bottom. Okay, now let's see what happened in the 2017-2018 cycle. You'll notice again, we bounce off the 50-week moving average. We came up for a dead cat bounce. We cut through it. We then got rejected by it, and then we eventually just found our way down to the 200-week moving average. You can see we did a bit of a double bottom there. And then that kind of resetted things for the next cycle. And you can see here in the 2019-2020 mini rally we had here, again, we bounced off the 50-week moving average. We came up with a dead cat bounce. Once we went through the 50-week moving average, we then fell all the way down again to the 200-week moving average before we reset and went off to the next cycle. So right here in 2021, we have done a similar thing. We've bounced off the 50-week moving average. We've gone up. Now, instead of having a dead cat bounce in a similar way with a lower high that we did in these previous 3 examples, we actually did a 180-degree turn and kept going up. But now we've turned around and we have now finally very significantly cut through the 50-week moving average. So the question is, Do we follow the same pattern that we've followed in these three previous examples from 2014 to now and go all the way down to the 200-week moving average? Do we do that? Well, I would say the probability is quite high that we do end up somewhere around this 200-week moving average, given that we have cut through significantly the 50-week moving average. Now, maybe we do something similar to 2018 here, where we came back up to test it. You can see that we've come back up, we've tested it, we got rejected, and then we ended up going back down again. So that's a possibility. So that's where the 50-week moving average might be. Maybe we come back up to somewhere around this mid 40s, and then it's possible we get above it and go above. But given all the rate hikes and everything going on with the macro markets at the moment, I would say it's less likely that we do that, and we're more likely to get rejected and come down to the 200-week moving average somewhere this year. It could be maybe, it could be mid 2022. It could be at the end of 2022, sometime this year. Now, to give you an idea about where this moving average is at the moment, the 200-week moving average is at about $19,000, and it's rising. So if we follow the same pattern, we could see a 20K-ish Bitcoin sometime in 2022 if we follow these same patterns. So that's something to keep an eye on. Now, just having a look here at the Bitcoin chart. Again, we're on a weekly timescale here. A couple things to look at. Now, number one, I consider this so far a double top, okay? Even though this peak here was technically about 64,000 and then we got up to about 69,000, that's a little bit higher. I like to draw these trend lines on a bit of an angle. So notice that you can see here with these trend lines, they do tend to respect this kind of increasing line. It looks like here and here and all these points here. There is something to be said for these increasing lines. So if we look at an increasing line like this, then I do consider that a double top. But that's just a minor point. So right now, what I'm looking at are these two moving averages right here. This here is the 100-week moving average, and it's currently at about $31,000. And then we have the 200-week, which we looked at before, that's at about $19,000. So we tend to respect these moving averages. So it would not surprise me if we do find ourselves down to this level around the 31K mark. I'm sure there's a lot of liquidity, a lot of buying that will be going on around this 30K mark. So we could come down to this moving average around 31K and then have some sort of relief rally where we bounce up. And here is the 50-week moving average. So, we've got to be careful how far ahead we predict. But this is just one particular example that may play out, which is similar to previous cycles. So we may bounce off the 100, go up to the 50, which at the moment will be around the mid 40s, and then we could get rejected and then meet the 200-week moving average, sometime later this year. If it follows this pattern, that's looking at like around May. But who knows? It could do anything. We might come all the way down to it, or maybe we may bounce up higher again and make another peak. Anything can happen. But that's one particular scenario that may play out. So anyway, that's all for today's video. It is looking like we are following a similar pattern to previous cycles, even though we did this kind of double dead cat bounce. And given the rate hikes planned this year, and given that China is struggling, and China is the world's biggest exporter and the US is the world's biggest importer. So when China has issues, it can affect the US markets as well. So given all those factors, I am leaning more towards the downside here, and I'm expecting us to go down somewhere around the 20K region later this year. Now, it won't go in a straight line. We might come down to the 30K mark, bounce up again. I'm tipping we'll hit the 50-week moving average. That will be a major level of resistance. We'll have to see how we go from there. But then if we get rejected from there, I think we're going to make our way down to that sort of 20K region later this year, something like that. So anyway, that's all from me. Hope you enjoyed that video. And until next time, I'm Tim, and cheers.